Hi everyone, today we're going to talk about one of the famous fairs that Computer Service Fair happened in 2009. Let's first start with some relevant fact. Our main character today is Sanyam Computer Service Limited, founded in 1986 by Roma Raju and his brother Rumalinga Raju. The company was offering IT and BPO services, and it is an outsourcing company. It was the fourth largest IT software explorer in India at the time. They have over 50,000 employees and operated in over 60 countries. The company worth over $2 billion in 2008. Compared with 2003, they have a compound annual growth average of 40%, operating profit averaging of 21%, a stock price increasing by 300%. And they also awarded in the Golden Peacock Award of Corporate Accountability in 2008, as well as the Earnest and Young Entrepreneur of the Year awarded in 2008. The freight itself is the India's largest corporate freight. Everything was explored until January 7, 2009, when the market received the resignation from Mr. Raju, with his confession of him manipulate the account of 7,000 crores rupees. He admitted that he began to inflating the accounting book since 1999. For example, in October 17, 2008, he have overstated the quarterly revenue by 75% and the profit by 97%. However, this fraud is not happening only because of the greedy of Mr. Raju, but also the auditor community must take a big part of the responsibility. The auditor community, PwC, have not noticed 7,561 fake bills after auditing Sanyam for almost 9 years. How did Mr. Raju exactly get to fake such a big number of bills? So he created records for fake employees and withdraw salaries with using their name. He ended up faking about 1,300 employee reports and earned about $3 million per month from the company. He also used his personal computer to create a number of bank statements that can inflate the balance sheet with non-existing cash. He also asked his internal editor to create fake customer identities and fake invoices that inflate the revenue. This inflates revenue and inflate cash. Both gives the company a look of financial health, which makes the company get easy access to bank loan. It also creates an impression of success to the public that can increase the share price of the company. Therefore, Mr. Raju are able to sell as much shares as he can at a higher price. The salaries he withdraw from the company, the bank loan, and the sold shares both turns out to money. But where did this money exactly go? Well, there is a big booming in the real estate business in Hyderabad in early 20th, and Mr. Raju have used most of his money he got from Sanyam to create this new company called Metas in the real estate field. There was also rumors said that Mr. Raju know the metro plan that would be built in Hyderabad. Once the metro have been functioned, the price of the land would incredibly increased, and therefore he would make a lot of profit out of this. However, due to the recession of 2008, there was a big hit in the real estate market, and the hope of Mr. Raju of making such big profit from real estate was just not happening. And thus, there will be a hugely overstated asset and underreported liability because of the big hit from the real estate market. And nearly $1.08 billion in bank loan and cash that the books show on was just not exist, and now the gap become too big to fill. Though Raju's last resort is use Sanyam's name to take over Metas, therefore he can announce to the public that the gap of the cash has been used to purchase Metas. However, this plan is folded after the shareholder opposition. This which also leads to the resignation of Mr. Raju, and he committed about his crime. Aftermath. 2 days after his confession, Mr. Raju is arrested. He was charged with criminal conspiracy, breach of trust, and forgery. The share of the company fell to 11.5 rupees compared with the highest point of 544 rupees in 2008. There were also 112 sales of different land purchases found in the youngest Raju sibling's house. As I said before, the auditor community, in this case the PwC, should also take a big part of the responsibility, and they have been found guilty in this case. Their licenses have temporarily revoked for 2 years, and other companies audited by PwC have also resulted a share price falling by 5 to 50% due to the lack of dishonesty. The Indian government also realized the big impact and the influence by the threat of Satyam. They have soon appointed the new boarder to Satyam, and the boarder's goal is just to sell the company within the next 100 days. At the same time, the government also realized the deficiency of their current corporate governors, which then they soon come up with new measures in that. Some of the key ones include they start to use international financial reporting standard, and their appointment by CFO by audit community must based on qualification, experience, and background. There will be a rotation of auditor every 5 years, and 1/3 of the board of companies should consist of independent directors. And auditor community has to accommodate a majority of independent directors. It is obvious that this threat brings a big hit to the Indian industry and also have made a big change in the industry. Now let's talk about the ethical dilemma happened in this thread. It is clear that Raju was completely controlled over by his greedy and his willing towards money. He chooses the worst and easiest but most unethical way of gaining money. He forged accounting books, diverted money received from his shareholders, and created fake client account salaries and even invoices. All the choices that he made are just based on his greedy. Even the decision of him getting into the real estate market was also a decision made based on what he know of the metro plan. That is also an unhealthy competition. Even the auditor in this case have give convenience to Raju, and it is their declaration of duty. Did they really don't know what is Miss Raju doing? No, perhaps they might be aware of what is happening, but due to all the benefit and advantage given by Raju, they choose to not report this and not to even pay attention on it. However, on the other hand, Mr. Raju also knows he is doing the wrong thing. Just like what Mr. Raju have stated, it was like riding a tiger not knowing how to get off without eating. Maybe Mr. Raju didn't notice this and didn't expect this result in the first time when he started to fake the accounting book. However, there's no turning back when he started to exaggerate the truth. Following up, let's talk about the stakeholders happening in this case and their supposed ethical obligation. So one of the biggest and most clear stakeholder is Mr. Raju and his family. And 3 of his obligation are loyalty, compliance with applicable laws, and observe his ethical standard. And clearly he didn't done any of these. First, loyalty. Even though Mr. Raju's decision of fake the financial books have attracted the shareholders, have increased the value of the company in some way in the short term. However, after everything has been found out, the damage of the damage towards company's interest is a lot more than what it brings to the company. And it is also clear that he didn't follow any rule or regulation and that is applicable towards the company's activity. And lastly, he's not being honest to the shareholders and innovators. And a minor stakeholders in this case will be PwC, the auditor. The auditor is supposed to be integrity, objectively, confidentially, and competency. And it is also clear that the PwC also didn't follow their ethical obligation. If they do follow their industry principles, they should be easily found out about the fridge of Mr. Raju. They also performance their service non-professionally. They just simply believe in whatever Raju told them, but not actually doing their own research. So there, both PwC and Raju didn't do things that they're supposed to do, and if they do follow all these ethical obligations, this threat would not be happened. And again, some core values and virtues showed up in this case are integrity, honesty, fidelity, charity, responsibility, and self-discipline. Again, it is clear that both Mr. Raju and the auditor PwC didn't follow these core values or virtues. Therefore, this fraud would happen. Now, some relevant operation and accounting issues showed up in this case. These are ethic, conduct, regulation and compliance, and lack of management. So ethic conduct is clear because both PwC, the auditor, and Mr. Raju, the chairman, didn't follow their ethic obligation, and therefore it causes this threat. And the regulation and compliance, it is not complete and there's deficiency in them, which is also the reason why this threat happened. And last but not least, the lack of management. The regulations are not well managed. Siam Computer Service Company, it is not well managed, and the auditor committee, PwC, is also not well managed in this thread. And these combined that result out this the famous thread.
So now we'll be talking about alternative ethical options of stakeholders. So the first major one would be to sue the company, and another option that we came up with was, which is minor, was pulling out your investment. And now we'll be talking about the consequences of these ethical options. So if you go down the lawsuit route, this could lead to more expenses, as you would need to hire a lawyer, and also it is a very long process, so you might not see results as fast as you would like. And a minor consequence of that option is that you could possibly lose the lawsuit, but we feel that in this case that wouldn't be likely due to the nature of the situation. And another major consequence, if you go with the route of pulling out your investment, is you'll be at an incredible loss on your investment. As I mentioned before, the stock was at 540 rupees and it dropped to 11. Now, the alternative ethical course of action. So we believe that the best approach would be the justice approach. The reason for this being is the parties who've committed a crime will be held accountable, and the parties affected by the crime will be compensated appropriately, and also it will be conducted in a court of law. So there won't be any biases, and we personally think that it's the most ethical and most neutral approach, and the pros outweigh the cons with this option in comparison to other options. And yeah, that's all we have. Thank you for watching. If you have any questions, our emails are on the slide. Feel free to email us your questions and we'll be happy to answer. Thank you.